The merge is finally here. What does that mean for the value of Ethereum? Hey everyone, Ian King here with your Winning Investor Daily weekly update. We're going to talk about what happened with Ethereum today with the big merge from proof of work to proof of stake. We're going to also discuss what does that mean for the future value of the world's second largest cryptocurrency. But before I do that, if you like our content, please go ahead and smash that like button, subscribe to our videos if you haven't yet. And lastly, feel free to leave comments. We'd love to hear from you and potentially answer future questions on another webinar. So before I get into it today, I just have to note that this is a very historic day. The Ethereum network went from proof of work to proof of stake. And there's been a lot of buildup into this. There was some, nervousness that it wouldn't happen, or there would be a bug in the system, or Ethereum would go down. For all intents and purposes, it worked out pretty well. It seemed to have gone off without a hitch. The proof of stake network is running currently right now as I'm recording this. And I'm going to get into some of the supply dynamics in a second. But I just want to quickly explain for our viewers out there how monumental this is and why it's so important. See, historically, the Ethereum network ran on a consensus mechanism, and that's a fancy word for saying the way that you get multiple actors to agree upon something and come to a consensus. The consensus mechanism was known as proof of work. And in a proof of work protocol, you basically need high-powered miners that are very energy intensive to compute and guess specific numbers. And when enough of them have an agreement and one is randomly chosen, they get to append the next block and they're rewarded for it. That's basically what mining is. And it uses a lot of energy. I mean, there are estimates that cryptocurrencies use about as much energy as the entire country of Norway on an annual basis. And you can imagine with electricity prices the way they are throughout Europe, why this is not necessarily a good thing. So today, Ethereum's network moved from proof of work, which remember requires lots of energy and purchasing $3,000 to $5,000 computers, to proof of stake, which doesn't require mining. It just requires that you stake the native token of the cryptocurrency. In this case, you stake ETH in Ethereum. Now, the biggest change is that the energy usage is now going to drop 99.9%. So for all of you environmentalists that were worried about how much energy Ethereum was using, that is out the window. I mean, Bitcoin still uses lots of energy, don't get me wrong. And there are other cryptocurrencies like Litecoin and Zcash, which still need computational power to be mined, and they use energy. But Ethereum is now the largest proof of stake cryptocurrency. It's number 2 cryptocurrency in the world behind Bitcoin, and the largest that uses the proof of stake consensus mechanism. Essentially, proof of stake is where users have to stake their tokens in order to secure and validate transactions. And how this protocol works is that everyone stakes in different nodes, and you have to have a minimum amount of cryptocurrency to do that. And the protocol goes and selects randomly a group of stakers. And if 51% of those stakers agree with the transactions that had happened in the last time period, then that block will be added to the Ethereum blockchain. And that is how proof of stake works. And so the other big change that happened in the Ethereum network is now that you don't have miners anymore, you don't have to compensate them. So previously, when Ethereum was proof of work, they had to issue about 13,000 new Ethereum per day to compensate the miners for securing the network. But now that everyone can stake and validate transactions instead of the mining in proof of work, the Ethereum issuance is going to drop, and it's dropped today by about 90%. Okay, so when proof of work was the consensus mechanism, they issued about 13,000 new Ethereum per day. Now it's about 12 to 1,300. And that means that Ethereum's annual inflation rate is going from 4.5% to something that's around 0.4%. Okay, now, but if you add in the amount of Ethereum that's getting burned to pay for transactions, you get a Ethereum supply that is slowly deflating and causing scarcity. And that means when you have something that is becoming more and more scarce and demand stays constant, then you have higher prices over time. Now, I'm not saying this is going to happen overnight or next week or next month, but if we continue down this path where you have less Ethereum issued than is burned, then the currency becomes scarcer, which leads to higher prices. Economics 101 will teach you this. If you have the same amount of demand and less supply, then the price goes up. Now, let's take a look at Ethereum's chart, and I want to share with you a website that I've been monitoring that can show you exactly how much Ethereum is issued per day and how much is burned. So first and foremost, Ethereum proof of work to proof of stake, huge buildup to it. What happened? The price went down a couple percent. So, you know, it went off without a hitch. It's exciting. But the bigger story here is that, well, probably some traders and speculators were buying ahead of it, thinking that it would, you know, run up after this monumental move. But the bigger story here is this deflationary aspect. And this website is great, ultrasound.money. You can give them a shout out for whoever created this. I'm really not sure. And it shows you how much Ethereum is burned in the last day. So 0.6 million burned ETH per year at the rate it's going today, and how much issuance. So if you look at the issuance today versus the burn, they line up to a supply growth of 0. And if we get to a point where the burn is increasing faster than the issuance, you know, then you're talking about scarcity becoming seriously relevant more than it is right now. So this is a really good website. They've got some analytics in terms of like the ETH supply projection, and it shows you right here that after the merge, that the supply is actually going to start to decline because of the burn mechanism and not as much issuance. So throughout Ethereum's lifespan from 2015 all the way up to this day and age, there was more and more issuance to compensate the miners. But now that the miners are gone, you know, you have to pay the stakers, but you pay that in fees, and you also burn the currency to make the people who's staked Ethereum more valuable as that Ethereum gets more scarce. So pretty exciting times for Ethereum. Would love to hear from you in the comments. You know, how did you celebrate your merge day today? I'm Ian King. Thanks a lot for tuning in to Winning Investor Daily Update, and we'll talk to you next week. Take care.